Hello, everybody. Welcome to the show. My name is Stefan Choi, and this is Trading with Livevol. And this is where I trade my personal Reg T account, and I use LVX to trade. And you guys can kind of see how I trade and how I use the Livevol X to trade and use it to make my trading decisions. So basically, the biggest news today was the unemployment report. It came in higher than expected, 295,000, and the unemployment rate dropped to 5.5. I'm not sure exactly what people are looking for. I think it was like between 220 and 240 was kind of what people were expecting, and a lot of people were actually even predicting a lower number because of the bad weather we've been having in the East Coast. I live out here in California, so I haven't experienced any of it, but my folks who live in New York have pretty much told me that the weather in the winter this year has been pretty dreadful. So, so that apparently caused SPX to go down, which is almost counterintuitive, right? Like you get good jobs report amidst bad weather and the market goes down. And a lot of times, I think before I got into finance, probably it's something where people are like, well, what's going on, right? The biggest reason most likely is because this almost it's implying strongly that the Fed might have to raise interest rates in June, since Janet Yellen pretty much been saying that they are going to look for the actual statistics to make the decision, and these kind of statistics kind of makes it seem like you should raise interest rates sooner than later. So I think that's why the market's selling off. Not sure why. In terms of not why, but not sure if exactly that's the reason. Sometimes when the market sells off or goes up, you want to kind of peg, some kind of reasoning behind it. Sometimes it just sells off. It's recently hit an all-time high, so selling off a little bit is pretty natural. So it could be just that. As well as I think in the past, every time we have unemployment jobs report, the market's been usually bearish. So as you guys know, I was kind of saying it looked like it was going to go down in my prior videos, but I wasn't sure because so many times in the past it would like go here and then make a new high. You need the SPX and the VIX to kind of confirm what you're trying to do. And looks like they're both kind of confirming, but I still can't bet to the downside right now. I don't know why. I think it's because the job reports was so good that on Monday people could like look at it over the weekend and say, even if they raise interest rates, it's not going to be that much, right? It's not like they're going to say like, we're going to aggressively now raise interest rates when the rest of the world is lowering their interest rates. So most likely they're only going to have one interest rate increase this year at the most is what people are thinking. And with the interest rate going from 0 to 0.25, not really sure if that really affects anything in the marketplace. And so my thinking is that this could have a huge bullish scenario on Monday, or we can sell off more. So since to me, it's more like, even though like when I look at these charts, it looks like we're headed down to maybe to the lower range of the Bollinger Band, maybe around the 260 area, 2060. I just don't feel comfortable betting to the downside. I might put a little bit on, but right now I'm not sure about it, right? So if you look at the tick chart here, this is the 2-day, basically this morning the market was kind of deciding which way to go, and then finally I think they decided to sell off. they might actually think a little bit more and then boom, go down even further. So usually, like, there's no reason at this point to buy. Like, let's say, you know, you are buying or selling. At this point, I would say the sellers are more in charge than the buyers, because I don't want to buy this, right? And if I'm long, I would be kind of worried. If I'm short, I would be getting happy. So at this point, I think the people who are leaning short have the advantage. So the consequence of that was the US dollar increasing dramatically. Now, if I knew that the unemployment rate was going to come in that high, I probably would have bought more calls in the UUP. So my UUP calls are working out fantastic. I wish I just bought like 1,000 of them. I always say that after the fact, like I wish I bought, like, you know, put a real bet on, but I think it's pretty good right now. Like, I want to add to the position, right? But it's like so far away from the actual, like, you see how this Bollinger Band, it's like so far away, and every time it's gone really far away, eventually it actually goes down and consolidates. The real question is it here, right? You see how here, and then it went up like literally for another like 2 weeks. So are we at that stage, or is it actually going to pull back? So it's like the thing with technical chart, it's so easy to read these technical charts after the time has passed. It's way more difficult, you know, at that moment, right? So at that moment, you can say, hey, it's outside the Bollinger Band, it's going to retrace, it's going to come back down. Or you can say, hey, it's finally making out this breakout move, and it's actually going to have way to go, right? So I think if you look at the currencies right now, with the euro, it's 108. It was like 150. It was like 135. Then it got down a little bit. We stabilized around 115 for a while, and then now we're making another move down. Either it's gonna kind of like go down to 105, maybe stabilize at 110, or we're just gonna go to $1. But I think US dollar and euro going to parity is pretty much there, as well as the US and the Japanese yen. I think it's consolidating at the 120 area before it actually goes higher. So my whole idea is, okay, Stefan, when do you actually add on to this position? I'm not comfortable adding it on here. I'll probably wait until it goes down. One of the things I did want to talk to you guys about is, I know I talked to you guys about doing the spreads before, right? But you see this 27, if I sold the same amount I bought here, now this is the weakness of a spread if you did the spread, is the fact that if you wanted to lock in, you have to actually buy this back for 43 cents. And I think yesterday I talked about it was 35 cents, right? So 8 cents is how much it increased over, you know, which is like over 20%. And now you have to buy this back, which is all premium, right? So it's just kind of like, it makes it more difficult. Right now I have 13 of these. You know what? Now I can sell these, or I can sell the actual 24s itself, or I can go and short stock, right? So what I mean by shorting stock is, I essentially have 24 calls, right? But as soon as I sell 100 shares, I'm going to have 12 calls, and I'm going to have 1 put, right? And why is that? That's because synthetically, right, buying call plus selling stock, and you guys can get the formula. Just look it up in Google. I don't want to write the formula. It's almost like a waste of time. But I think it's important to understand the concept. So whether you buy this put outright or you basically sell stock. So if you look at this one, right? If you add 24 to 196, that's 25.96. If you sell stock at 77, essentially you bought these puts for 20 cents minus the interest, right? So I'm not going to go into all this interest stuff. It's just, you'll figure it out. Maybe ask your broker. But essentially what you can do is by selling stock, you can actually turn some of these calls into puts. Now, why is that great? Well, if you guys think like, hey, UUP has, you know, it's going to kind of consolidate and go down, then you want to be able to make money off by selling the stock, right? So when the stock goes down to like 25.50, you can buy those stock back and you've locked in the profit, and now you're back to having 13. So because your long-term goal hasn't changed, right? You're just trying to make money in between as well. So a lot of the times what I used to do is if the stock actually moves in my direction faster than I anticipated, well, I might sell some stock against it because now I'm essentially turning it into a straddle, right? So now at this point, if I sell 300 shares, if UUP keeps going up, I'm still going to make money because I have those 10 calls. If it goes down, yeah, I'm going to lose money on those 10 calls, but I'm going to make money on the 300 shares I sold. And essentially, this is great because I wasn't going to take this off. It's a different story if I was going to sell all 13 of these, but since I'm not, it doesn't help me just to sit on it. I can try to make some money with this position. Now, the tricky part is it's going to eat up your haircut. So currently, I do have a decent amount of haircut just because I don't have any positions, right? So this is my account, right? So basically, let's see. Yeah, so I have about 105,000 right now to actually play around with. And if I sold a couple of 100 shares, it won't make any difference, right? So let's say I do that. So I'm gonna put, let's do 200, right? Okay, so I have an order in. So now as soon as I get filled on this 200 shares, I'm gonna turn 13 or 2 of these calls into puts, right? And I'll be able to make money on the stock if UUP goes down. So this is a good way of scalping. So when it goes down, I'm gonna buy the stock back because I think it's gonna be going higher. So I might actually add more. So in the long term, I haven't changed anything, but this might be a way to scalp. Now 13 isn't that many contracts, so most likely I shouldn't even sell, just because, you know, why, like a lot of that stuff people always do is they always cut off their winners too early and they keep the losers too long. I'm no exception to that rule. But imagine like the guy here, right? The guy right here on October 31st, when it actually made an all-time high. Imagine that guy going like, hey, you know, now I'm gonna sell out. And essentially he missed like this whole move, right? Just because he wanted to lock in like 30–40%, right? So I think a lot of times what you have to do is you have to really assess it at this point whether you would be bullish or not. My long term is bullish. At this point, I'm not really bullish. I would almost be more bearish just looking at the chart, but I'm kind of bullish looking at the fundamentals, which means that US is the only country, and now we're more likely to have interest rate hikes early, which will strengthen the dollar versus the rest of the currency. So just so you know, UUP, oh, see, I just sold 200 shares. Okay, so let me go to my risk graph, right? All right, so this is my risk graph now. See how like, even if it goes down, I lose less, right? But let's have this position before I did it. So before I did it, sold those stock, basically I just had a call spread, right? I mean call. I just had a call, and I put 200 in there, taking this 200 out, I can actually now go and see my real position and say, okay, this is how it is. Maybe I look at this and I'm like, you know what? I don't like it. I want to short some more. I want this line to go higher. So I put in another 200. And then boom, this is going to go higher, right? So you can the awesome part about this, the Livevol X, to me, on these kind of scenarios, is the fact that you can actually play around with it right there. So I'm gonna get, just so I want to give you guys an illustration, right? So you see how this, so you see how I put minus 200. Let's say I want to put, I want to turn all of it into, because I think this is the top, and I think we'll consolidate. So if you actually, right, so basically now, by selling 1100, you've turned all of these into puts. So I'm not sure why it's not. Maybe it didn't. Oh, I see. I see. Okay, so basically now I've turned all of them into puts, but as you guys can see, they're only 16 delta, so they're not really gonna come in unless the stock really starts going down. I don't know why. Huh, that is a little weird. Well, I'll check up on it, why it's not showing it, but basically it should be like a put. That's what it should show. So what I'm gonna do is I can basically turn them into calls and puts. So if I sold 1,300 shares total and this thing went down, let's say 30 cents, right? I'm gonna make, you know, 390 bucks. All right, 1,300. Yeah, 390 bucks, and then I'll buy it back, and then I have these calls again. So it's pretty awesome to do. That's what so I'm short 200. I might sell some more. I might not. I'm not sure. So that's my UUP position. The other two position I have is this VOYA position. So basically, it's been kind of just, you know, static. The good thing is, like, even though the market's selling off pretty drastically, VOYA is kind of hanging in there. Now, one thing about VOYA is I don't think it's gonna move. Like, if you can see, it's pretty been at a tight range. Even when the market went up, VOYA didn't really go up as much. So basically, I think it's just consolidating, and over the course of next month, I think it's gonna go higher. I like the low volatility aspect of this trade. I wouldn't want this thing to go up and down a lot. That just makes it, I don't know. When you own calls, you don't want to see that too much, right? When you own puts, it's okay. When you own calls, you don't want that kind of volatility, because it usually means there's a good chance the stock's gonna go down. Not sure if people did studies or what the reasoning behind it is. My personal experience says that if I own calls, I don't want it to go up and down too much. Just kind of like the slow grind up is the best way to make money on the calls in the money, I think. So anyway, the VOYA is doing good. YHOO, as you guys know, you know, I want to I want to buy more YHOO calls, but it actually reversed. I thought the other day it was going to go down, but you see this reversal. I'll see where it goes. It's in like no man's land. It can like kind of like start going up again, but it can actually roll over. And I think the biggest one will be keeping an eye on Alibaba. They have about 500 million shares, or 460 million shares coming unlocked like later this month, March 27th or so. So you'll see how the stock reacts. My thinking is you probably don't want to buy too aggressively before that unlock, just because it's just in my experience, it's just not really that good, right? So you see how the total outstanding shares is 2.5 billion. The shares float is 1 billion. You're actually gonna pump in another 50% of float. Now, anybody who's invested in Alibaba, let's say you are a very, very early investor, and now you make this gigantic amount of money. Even if you owned, you know, and you were bullish on Alibaba in the long term, the chances are you're not going to hold 100% unless you're just, you know, that would just be the bad move, right? So if I was someone who owned Alibaba stock for a very low price, let's say you owned it for like, you know, 20 bucks, and now you have a chance to unload it for 85, you know, I'm going to unload some of it, no matter what, even if I was the bullish, had a very, very bullish attitude or idea about Alibaba going forward. So I think Alibaba eventually will go higher. There are some hurdles that they have to overcome. And right now, it seems like there's more negative than positive. So it is why I am buying YHOO calls, because I feel like they have the Alibaba component in it, but also they have their own company's value, which is valued at zero pretty much, which I think that it's worth more than zero. So I think there's like a additional value in this that's not being accounted for, essentially. One of the other plays you can do, for those of you guys who might say, hey, I don't want to jump into YHOO now. I think maybe YHOO can go to, I think let's say Alibaba is going to go to 70, and in turn, maybe, this might make YHOO go to 40, right? So let's say in your mind, you're like, you know what? I want to, I want the 40 level. I want to buy YHOO for 40 bucks if it ever went down. Essentially, what you can do is you can start selling the 40 level calls, puts, I mean, naked. And then basically what that does is when YHOO goes down to 40, you get the stock handed to you, right? So while you're waiting for YHOO to go down to 40, you basically collect every month. And then if it does go down, you get this, YHOO for the price you want. So a lot of times people who only trade stock, they'll have a good till cancel order for $40, which is kind of a waste. If that is what your order is, you might as well just sell the put. There's no reason to have a stock, basically, unless like you think like it's gonna hit there and then, it's gonna run back up or whatever. But essentially, like, if you really want to get filled for 40 bucks and that's where your, order is on the stock, you might as well just sell the put and collect while you actually are waiting, right? So this 40, it's pretty much like 7 cents. It's not really that much. So you might have to be a little more aggressive, like maybe sell the 42s, right? Or go longer term out like April, and then you can sell like the 41s. But anyway, it's another way of doing it. It just reminded me because of this right here. You see how this person did this trade for 275. This most likely looks like a buy, right? On Amex, the quote was 249 at 286. This is pretty awesome, by the way. You can actually go in there and see every quote, and then when you click on it, you'll see the MBBO at the time of the trade. and we have this for back to 2 years, March of 2013. You'll see every tick, every trade on every strike. So it's absolutely immensely powerful. There isn't a single application in the world that can do that right from their fingertips, and ours is the only one. So when it comes to options order flow and historical trades, it's like a Lamborghini, and the next best car is like a Honda, right? It's absolutely amazing, and it's the best. But anyway, it just reminded me because this could be a way to sell, right? So you can sell this at 280, right? If YHOO doesn't go to $40, but it just stays here or keeps going up, so this would be more of a neutral, slightly bullish. You would sell this for 280, and by the end you'll collect it. So what is that in terms of the percentage? 2.8 divided by 43.8. Right, so you'll make a 6% return if nothing happens. If YHOO actually goes to 40, you can buy it for 40 next year, right? But if you do buy it for 40, you're going to make another 6.3 because you sold this at 280, and basically your break even will be 280 minus 40, right? So it will be 37.20, right? As your break even on this call or on the stock that you bought. So all around, I'm bullish, but if you're kind of medium, you have to sell this. Now, one thing for sure, I would not do this unless you had a ton of money in your account, or unless you had a PM account, because it's going to eat up a ton of margin and it's not worthwhile. So a lot of times, most of my strategies when I was a professional will be selling. This would be probably some of the strategies I would be implementing. Like I would sell a lot of the 40 puts, and then maybe buy a ton of like another 40s, right? So I might buy some other puts down here to protect myself, and each month I would do like the time spread, right? Selling the front month put, buying the back month put, and basically trying to load up if I wanted some protection and so forth. I mean, there's like tons of ways you can go about it. But so YHOO is not doing as well, but I'm going to try to pick up more if I can. So in summary, the unemployment report was better than expected. Most likely, this puts the Fed on notice to raise interest rates possibly in June, but it definitely takes the likelihood of not raising interest rates this year out. Now, I don't think the Fed wants to raise interest rates, but now that they are going to be data dependent, this puts them in some kind of decision-making process. They would have to kind of change the way they're going to analyze to raise interest rates. But in any case, basically, it makes the dollar stronger. Obviously, it weakens the TLT. You can see the TLT is just getting crushed. This is the ETF for bonds, right? That a lot of people like to invest, and as you can see, it's just getting hammered. This might actually be a good time to buy puts, not right here, but when it bounces, right? So this is probably something I'm looking at when it bounces to buy some puts, because most likely this is headed down, right? So that's something that you can look for. And obviously, I am bullish on the dollar for the rest of the year. And then I bought VOYA because of the order flow information that I found in LVX. And then obviously I just talked about YHOO and Alibaba and what I think about it. So I hope you guys have a great Friday. I will talk to you guys on Monday. Hope your trading goes well. And have a good weekend. Take care.